Good evening and thank you for joining us on India Business Hour. I'm Parikshit Luthra. Joining me from our Mumbai studio is my colleague Kritika Saxena. Our top story tonight. Yes, it teased, it threatened and then it did. The rupee breached the 73 per dollar mark for the first time. Remember, for a month, the government has weighed in with statements and steps every time the dollar threatened to breach this mark. But today, the Indian currency couldn't be held back as it shot up all the way up to 73.42 early morning. It finally settled at 73.34 for the day. So what's taking a toll on the rupee? Brent prices hovered around the $85 mark, leading to huge outflows of cash. However, after remaining firm through the day, crude prices have eased now as data shows the US crude stockpiles have risen by 8 million barrels. Crude wars and weakening rupee dampened sentiment on Dalal Street. Market witnessed a major sell-off in the last hour of trade. The Sensex gave up 36,000 and the Nifty ended below 10,900. Meanwhile, with the rupee testing new historic lows, the RBI stepped in. The central bank liberalized rules for oil companies to borrow from abroad. The move is expected to ease borrowing cost for OMCs.
The new circular allows it to be taken from more than allowed sources earlier and without a mandatory hedging requirement. So the companies will have more flexibility to decide their own strategy for the risk mitigation and certain natural hedges which they may have and the timing of taking the hedges. And to that extent, the companies will have more flexibility to manage their foreign currency requirements. It should help in reducing the hedging costs also, because when you are borrowing for a longer-term dollar, the pressure on the immediate basis to hedge will not be there.
Today, there's a lot of pressure on the rupee in terms of exchange rate, and these oil marketing companies are the heaviest purchasers of the foreign exchange for their crude oil payments.
Yeah.
When they are able to borrow overseas, they will not be required to buy dollars in India to that extent, and they'll be able to use those funds, overseas borrowing funds, to pay for their oil imports. This is what I understand. This is a way it will ease a lot of pressure on the exchange rate that rupee buying by this oil marketing companies.
All right, so the move could cut costs and reduce pressure on dollar buying. But let's go across to Lata Venkatesh to make sense of this. Lata, the rupee touching new lows, RBI has made external borrowing easier for oil companies. What's your analysis on the net takeaway of this move?
After a gap of a day when markets opened to crude at 85, there was bound to be negative sentiment, and bang at the word go, you saw the dollar becoming as expensive as 73.30, then 73.42. What abetted the dollar buying was also the sell-off in equities that one witnessed in the last hour on Monday. It was 1,800 crore of FII selling of equities, and those custodial banks which sold the shares were buying dollars for their FII clients. But intervening news that RBI could open a window whereby oil companies can directly buy dollars from the Reserve Bank kept the dollar from rising too much, although that news was later denied. Because after market hours, the Reserve Bank has liberalized the rules, and now this makes it slightly cheaper for oil companies to borrow, because they don't have to mandatorily hedge. Also, they can borrow on the automatic route from several kinds of sources. Earlier, the sources were restricted. Now, is this measure enough to remove the pressure of dollar buying? Yes, it is. Because if these guys are going to borrow abroad, the immediate pressure in the domestic market declines. Now, this doesn't decline immediately, because dealers say it's not easy to raise money in the bond market. Bond market spreads have gone very high. So these banks, these oil companies have to get into banking arrangements. That takes time. To arrange a foreign loan can take between 2 and 3 weeks. However, oil companies, in anticipation of those dollars, can sell forward dollars in the domestic market, right now, like tomorrow or day after, and that can bring down forward premia and soften the spot rupee. So the expectation is that, around the current levels, it should be controlled, because the government is repeatedly showing resolve to open one window or another to keep the rupee from depreciating too much. But all that will help only if oil stabilizes at current levels and moves lower. If oil were to move at $2 a day like it did on Monday, then all bets are off.
And staying with the fall of the rupee, Commerce Minister Suresh Prabhu is expected to chair a meeting tomorrow to take stock of the pressure on the rupee and the trade deficit picture. Sources say officials from finance, petroleum, coal, pharma, steel ministries may attend the meeting.
All right, so that meeting is going to be important to assess the changes or decisions that are likely to be taken by the government. But earlier today, Lata Venkatesh caught up with a bunch of experts to discuss the rupee depreciation and the road ahead for the home currency. Here's that conversation.
Our guests are Indranil Pan, Chief Economist at IDFC Bank, Anant Narayan, Professor at SPJ Institute of Management and Research, Alvin Tan, Director of Strategy at SocGen, and Gareth Leather, Senior Emerging Market Economist at Capital Economics. Also joining me is Kamal Mahajan, General Manager and Head of Treasury and Global Markets at Bank of Baroda. Gentlemen, thank you very much for joining me. Well, first to someone who must have been at the trading desk all day, Mr. Kamal Mahajan. Mr. Mahajan, what was the sense you got? Was there panic or was it more an orderly sell-off which was expected?
I won't say that the panic was there, because the way rupee is behaving, it is quite expected, and the way it has been moving, looking at the oil prices.
Mm-hmm. A similar question to you, Indranil, and a little more academic as well. Do you think we are now approaching long-term valuations? The rupee was overvalued in 2017 and maybe the first 6 months of 18. Do you think now it's more towards its long-range valuation?
India is broadly participating in an overall currency weak atmosphere, given that oil prices have actually sort of moved higher, which obviously creates a lot more risk in terms of the current account and the fiscal and also the inflation dynamics. So the perspective today, in my opinion, is more to do with how macro stability factors are being looked at, rather than really fair value models, in the sense that you never have the perfect equilibrium in economics, and there can always be overshoot or undershoot to the equilibrium levels.
Let's look at the year-to-date depreciation of many of the major emerging market currencies, and that will come up for you. We stand at the highest level at 14.8%, and others like the Indonesian rupee are also noted for its vulnerability because of current account deficit and even its dependence of its government securities market on foreign inflows is down only 11%. If people have done worse than us, they are currencies and economies which are deeply in trouble, which have recessions. The Brazilian real down 19%, the South African rand down 16%, Turkish lira down 59%. So these are countries with recession. India is still a 7% growth country, and therefore this 14.8 sits a little uncomfortably, does it, Anant Narayan?
Well, Lata, finally everything boils down to flows. You know, where it should be is a function of whether the flows are sustainable or not at that particular level. Now, the reason why, you know, rupee depreciated, and some of us were calling for rupee to depreciate, is not because we want it here, but because the flows simply weren't stacking up. Our current account deficit has gone up from $15 billion in FY17 to $49 billion in FY18, and is now threatening to be about $85 billion. Our permanent inflows of FDI do not cover even half that number at this particular stage. So when you have that situation of permanent outflows going through, plus you have an overhang of people who have taken on rupee positions, you know, carry positions in the past, and I estimate that number is still about $100 billion since FY15. Put the two together, you're sitting on a toxic combination. Now, what has to be done, therefore? The good news, Lata, is some of this rupee correction, I think, is seeping through into trade. So if you see the trade data for this fiscal year, the first 4 months, the entire deterioration we saw in the trade numbers was because of oil. Last year, only 40% of the trade deterioration was because of oil. The rest was, electronics, it was gold, it was exports underperforming. Now it seems to be only oil, which means at least ex-oil, maybe the trade is starting to adjust. But I don't think it takes away the fact that there are still serious issues with our current account. Our exports need to be improved. Our manufacturing has to improve so that we can make more in India. A lot of reform has to be done around that ecosystem before we can truly say balance has been achieved.
We've got Alvin Tan as well. Alvin, how would you look at the Indian depreciation vis-a-vis other emerging markets? Have we at all reached a point where foreigners may find the rupee bond combination attractive? A bond that yields 8.1%, the 10-year has closed at 8.11 today, and the rupee at 73.4. Would that be at some point an attractive combination for a bond investor?
Hi. I don't think so at this current juncture. I mean, for example, we've seen much higher interest rates in some other EM currencies, and that really hasn't helped them, generate an appreciation in their currencies this year either. So I don't think that itself is enough, and there are big other external factors at play, which I've touched on before, namely crude oil prices, and of course the fact that U.S. bond yields are now at the top of the range, the 10-year above 3%, and likely will be pushing higher in coming weeks and months. So these external factors will continue to weigh heavily on the rupee and on EM currencies more broadly.
Okay, well, let me toss the same combination to Gareth Leather. Gareth, I think the Fed's trajectory is largely known, though the market may be understating what it expects from the Fed. I mean, the market expectations are lower than what the Fed itself is saying through its dot plan. As well, there can be a forecast of crude, and people are now converging around $90. I don't know, what is your number? Given this combination, where do you see the emerging market currencies? More turmoil to go?
It's hard to think that this is the end of the problems for emerging market currencies. Now, a number of factors have weighed on them over the past year. The first, as you mentioned, is rising US Treasury yields. The second is the trade war in China. More recently, you've had rising oil prices, and also the problems in Turkey and Argentina. Now, I don't think any of these are necessarily going to go away in the short term, and that bodes poorly, I think, for emerging market currencies, including the Indian rupee.
No, they're not going away, but they have been adequately discounted, you think?
It's hard to say exactly what the market is thinking within all this, but just given this kind of combination, they're unlikely to kind of go away anytime soon. And given that, it's hard to sound the all clear for these currencies.
What's the in-house view in capital economics in terms of crude? The one factor that that marks the height of India's vulnerability. Does it go to 90, or is there a 3 figure that you are thinking of in 2018 itself?
Sure. Well, actually, we think oil prices may be at or close to peaking, and a key reason for this is the outlook for demand. Now, the regions, or the world's two biggest store consumers, the US and China, we think growth in both of these countries is going to slow next year. And if that happens, then demand for oil will probably start to ease as well, and that will put downward pressure on oil prices. I think the big uncertainty is what happens on the supply side, especially with regards to Iran, whether you see a big drop-off in supply from there and whether other countries can make up the capacity that's lost.
Oh, yes, of course. Today we've been speaking with crude oil experts and bankers all day, and well, $90 or very close to peak was a view that was coming in. Alvin Tan, what's the SocGen view? Are we close to highs?
Yes, we do think we are closing on the highs. We are doubtful that we'll get to $100 a barrel level. So yes, about 90 probably is where it's going to peak out. And of course, on top of this, if indeed global growth were to slow down from here, which including US growth in our view next year, then that should also take off some of the edge from higher oil prices as a result of demand. So we do think demand should start to ease off soon.
Okay. Well, if you have to take a bet on Asian currencies, where would you find the low-hanging fruit, Alvin?
Well, okay, in terms of the low-hanging fruit, I think in particular we would favor those Asian currencies that are supported by positive external balances. So, for example, the Korean won, yes, a current account, positive current account would be helpful, I think, in this juncture, and in a world where globally growth is slowing down.
What's your call, Gareth? Do you think the Indian currency is close to at least stabilizing?
We think it probably has a little bit more weakness to go, but it's kind of close to the lows it reached. I think obviously the oil price is going to be a key determinant here, but there's other factors as well, which I mentioned, such as general risk appetite, the outlook for treasuries in the US, the outlook for monetary policy in India as well. So putting all this together, we think it probably weaken a little bit further, but we're hopefully kind of close to the lows it's going to reach.
What's your sense, Anant? Do you think 15% depreciation is enough to start the trade correction, trade deficit correction?
As I mentioned earlier, Lata, I think some trade correction is probably already underway. But we should not take heart from it. There are still some core reforms required around manufacturing, around making ease of doing business for exports better. We're still hearing, unfortunately, cases of ready-made garments exporters closing down shop in Tirupur and starting shop in Bangladesh, and those things shouldn't really happen. Okay. But I think some effect is coming through. The other thing you have to keep in point is that if you do too much of a correction in 1 year, you can still argue that RER shows that rupee is undervalued, overvalued even now. At some stage, if you start underperforming other markets consistently, as we have unfortunately been in the last few weeks and months, reflexivity can step in. You can have market levels determine your fundamentals other than the other way around.
Mr. Mahajan, come in on that. There was this to and fro that the Reserve Bank would supply dollars through a special window to oil companies so as to remove its deleterious impact or its scary impact on the markets. And then, of course, that statement got denied. If that were to happen, will that be a major pressure off?
Well, if that happens, what happens is the volatility goes away. And that helps the market always. Volatility normally tends to drive the currency more than it deserves. And that is what we can take.
But the dips get bought, Mr. Mahajan. At the moment the news came in, or rather the buzz or the rumor came in, you did see the dollar fall from about 73.40 to 72.90, and almost in minutes it got bought. It looks like there's a voracious appetite for dollars. So how far will this step go?
Yeah, looking, and as it has already been said by other colleagues, it is the oil price which really affects our rupee and makes people nervous. But what we have seen is every $5 now is impacting around a rupee. To the 1 rupee to the dollar rupee price. So that is where, and if we are expecting that dollar rupee is not going to, oil is not going to go beyond 90, then we say that fair depreciation has already happened.
Okay.
And the curve will be more of concave nature rather than convex.
Very quickly, from my global experts, one question to both of you. Alvin Tan, you said the rupee has not fallen enough. Would 75 be a nice round number when you think FPIs might come in, foreigners might come in?
No, unfortunately, I don't. I think part of the answer, again, has to depend on what the global situation is like. And also, the other part of it is that dollar rupee at 75 doesn't make it cheap at all. In terms of the real trade-weighted exchange rate, to see dollar rupee to be considered cheap, I fear you have to see a rate that is above 80.
Gareth Leather, Alvin Tan, Anant Narayan, Indranil Pan and Mr. Mahajan, thank you very much for joining me in this conversation.
After hiking the minimum support price for Kharif crops in July, the Cabinet today approved minimum support price for 6 Rabi crops. After the Cabinet nod, the MSP for wheat will be over 1,800 rupees per quintal with a hike of 105 rupees. MSP for safflower has increased by 845 rupees per quintal to almost 5,000 rupees. Hear out what Law Minister Ravi Shankar Prasad had to say about the intended impact of MSP hike. Remember, it's coming in the backdrop of that massive farmers' protest on the Delhi-UP border.
By increasing the MSP today, the farmers of India will have an additional income to the tune of 62,635 crores. Today's decision embodies the commitment of the Narendra Modi-led India government's commitment for the welfare of the farmers to ensure additional income.
All right, let's now get you the latest in the IL&FS rescue plan. 2 days after its appointment, the new board of IL&FS is likely to hold its first meeting tomorrow. Sources tell CNBC TV18 that the new board is likely to submit a probable revival action plan in a fortnight. Timsy Japuria is here with the details. Timsy, of course, this is the first meeting, but what can we expect out of it?
Well, sources have indicated that the newly reconstituted board of IL&FS is likely to meet tomorrow. Uday Kotak-led board is right now seeking requisite regulatory approvals from RBI and SEBI. The new board is likely to firstly prepare a blueprint on as to what went wrong and submitted it to the government and NCLT on October 8. Remember, October 8 is the date when the next hearing will happen on the case in NCLT in Mumbai. Apart from this, when it comes to the SFIO investigations which are going on, we reported first on October 1st that SFIO has come into action and has started making seizures of laptops, data, etc. of servers to try and gather as much information as possible. On the other hand, SFIO is going to, in a month's time, submit an interim prima facie report of probe on 169 companies which are under the IL&FS umbrella. Also, government feels that the new interim board is likely to get government's immunity. Government will handhold them. Government will try and restructure the immediate dues that the government entities have for IL&FS, be it IL&FS has to pay it or IL&FS has to receive these payments from various government entities. Apart from this, government is also trying to draw inferences from the Satyam SFIO report because there are certain similarities, but when government was looking for the report, it realized that termites have already eaten up the report, so they are now in search of that Satyam report to see how best they can draw inferences from it. We'll keep you posted on it.
All right, so termites have eaten that report, but hopefully there should be some kind of a digital backup. Thanks, Timsy, for taking us through that. But the other big story this evening, the Parliamentary Panel on Finance will scrutinise the IL&FS mess. Congress Lok Sabha MP Veerappa Moily, who heads the panel today, told us that the committee plans to meet office bearers of the debt-ridden company along with SBI and LIC representatives later this month.
We'll be calling the present the office bearers, the managing director, chairman, and also others. So then we are calling the LIC representatives and also the SBI, who have invested large sum of about 40%, and also the transport department. And after that, within a month or two, we are going to give a report.
So what about the new board of IL&FS?
That is what we are going to discuss with them on 30th. Of this month at Mount.
And the role of the previous board, sir?
Yeah.
Because a lot of members of the board
there will be a thorough inquiry and a thorough report which will be made because large scale stake is involved and it is looking after all the infrastructure project.
All right, so the parliamentary panel will probe the IL&FS issue as well, and they will be holding a meeting with key stakeholders in the days to come. Let's move on. India's second largest tyre manufacturer, Polo Tyres, has defended its decision to reappoint Neeraj Kanwar as the managing director of the company. The management, in a letter to CNBC TV18, has reiterated that the board has unanimously approved Kanwar's reappointment. Remember, this vote of confidence comes after the minority shareholders of Apollo Tyres voted against bringing Kanwar back as the MD of the company. Sonia Shenoy has more.
Well, yes, it is very interesting. The whole saga started last week when reports indicated that minority shareholders of Polo tyres have rejected the reappointment of Neeraj Kanwar as MD of the company. And the reason cited for that was about compensation. Now, we tried to dig deep into what the key cause of concern was. We found out that Neeraj Kanwar plus his father Omkar Kanwar together draw about 14% of the profits of Polo tyres. And that's a staggering amount, considering that the SEBI rules state that if you draw more than 2.5% of profits, you need shareholder approval. Now, they have gone ahead, they have applied to shareholders for an approval, but still the question arises is that how did the board of directors allow such a staggering amount to be taken away by Neeraj Kanwar and Omkar Kanwar put together? Now, based on our story, the management did reply. They said that on the 1st of October, the board reiterated its unanimous approval on Neeraj Kanwar's leadership. They said that the company under Neeraj Kanwar's guidance has grown the market cap by 700% since his appointment, and the board has full confidence in Neeraj Kanwar to continue Polo tyres expansion. However, they also mentioned that they will seek shareholder guidance on the compensation level, which is commensurate with the position. Now, that was the key issue. The company's growth was slowing down, but at the same time, the compensation of its managers or key managerial positions was going up. And that was the reason for the shareholder ire. The management has said that they will seek shareholder guidance on the compensation level, and they wish to reiterate a commitment to maximize shareholder value through strategy of profitable growth. It is that change of stance that has come as a bit of a relief to shareholder and institutional investors. Remember, the board of directors include very prominent names. You have Vinod Rai, you have S. Narayan, you have Pallavi Shroff, Nimesh Kampani of JM Financial on the board. So let's see which way things head. For now, the board is ready to take shareholder guidance on the compensation issue, which comes as a bit of a relief.
Okay, fair enough, Sonia. Thanks for joining in with that story. But here's the big political story of the day. In a major blow to the Congress party, BSP chief Mayawati has decided to go solo in the upcoming state elections in Madhya Pradesh and Rajasthan. The BSP chief claims that few Congress leaders are conspiring to destroy her party. Maria Shakil joins in now with the details. Maria, is this possibly posing a threat to the Grand Alliance for 2019 polls?
Certainly, this is a setback for any attempts at an anti-Modi alliance or a grand alliance or Mahagathbandhan, the images of which played out at H.D. Kumaraswamy's swearing-in ceremony in Bangalore. Certainly, as far as Mayawati is concerned, we can expect two chapters to unfold in this particular drama. Yes, she has said it clearly that she will not have any alliance with the Congress party as far as the state elections go, which will be held in the month of November, December. But she has perhaps also left a window of negotiation open with the Gandhis, because she has been she did talk about good relations with the Gandhis, about Sonia Gandhi in particular. If you look at those images of H.D. Kumaraswamy's swearing-in ceremony, we did see some kind of chemistry between Sonia Gandhi and Mayawati play out as well on the dais. So certainly she has left that window open, because she understands that the results in these assembly elections, which are being seen as semi-finals of sort, will decide her next course of actions in the run-up to 2019. As far as the BJP or the government is concerned, the BJP certainly is looking at every move of Mayawati very, very carefully, because they understand that if Mayawati, Akhilesh Yadav and RLD and the Congress, all of them come together in very crucial state of Uttar Pradesh, where the BJP got, along with its allies, got 73 out of 80 in 2014. It would mean arithmetically they would be at a huge disadvantage. But they are certainly hoping that Mayawati perhaps would not ally with the Congress party in the state of Uttar Pradesh or in other states, which would mean that does the Congress, on the second hand, let's not forget that does the Congress actually need Mayawati in the state of Madhya Pradesh, because the kind of alliances that they are trying to forge also means that the Congress can be on its own also in Madhya Pradesh. So Mayawati is sending a very important message, but today it is a huge setback because It is also a question for the Congress party if it can really emerge as a fulcrum, as a magnet which can unite other smaller parties around it, or does it really come at a cost in which the Congress will have to really cede space to regional players? So politically speaking, the statement of Mayawati and public display of outrage of this nature and targeting Digvijay Singh, who technically has no role as far as alliances forging in the state of Madhya Pradesh or other states are concerned, it is a message as far as politics is concerned.
All right, so BSP Chief Mayawati ruling out an alliance with the Congress party for the upcoming assembly polls. But what about 2019? Let's see what happens and what the BSP chief does during the general elections.
Welcome back. You're still with India Business Hour Plus. Now here's a CNBC TV18 exclusive. Your face could soon become your boarding pass at airports. Yes, the Civil Aviation Ministry is pushing forward with work on formulating common standards that will operationalize its Digi Yatra program. CNBC TV18's Anu Sharma has more details. Anu, how will this paperless air travel system work exactly?
Well, biometrics has been a buzzword for the Civil Aviation Ministry for the last few years, and the idea to come up with a paperless system to make air travel easier has been in the works for a while now. The Supreme Court's recent judgment on Aadhaar threw a bit of a spanner in the works because the idea was to build this system that would use Aadhaar card as a base primarily and piggyback a facial recognition-driven system on it. This would mean that facial scanners would be enough to allow someone to board a plane instead of issuing individual boarding passes. Now, we learned that airport operators have formulated the common standards for such a system, but instead of restricting it to Aadhaar card, any government-issued photo identification like voter ID card may also be used to generate a Digi Yatra ID. The most important point to note here is that this will be purely voluntary from the passenger's perspective, so that should address some of the concerns over privacy and data security. The DGCA is expected to put up its draft regulations on this program for public comment soon. Remember, private airports are also part of the panel that is working on the standards, so once approved, every airport operator will be able to set up the infrastructure to implement the program. One big question is, however, who will build and manage a database of passengers? My sources tell me that in all likelihood, this database will be jointly owned by all airport operators. The other important question, of course, is just how effective or popular this program will be, especially given the cost involved. But that's a question that can wait till the draft guidelines are finalized.
Your face as your boarding pass. Interesting story, isn't it? On to another CNBC TV18 exclusive. We learned from sources the government is looking to divest debt-laden Air India's ground handling arm before the end of financial year 19. The dates for the expression of interest for the ground handling arm will be set once the accounts for financial year 18 have been finalized. Air India is considering divesting some of its other subsidiaries as well.
And from one exclusive to another, during the second quarter of the current fiscal year, life insurer SBI Life clocked the value of new business margin of 16.2%. Now, that's the second best in the domestic insurance space. In a conversation with CNBC TV18's, the company's MD and Chief Executive Officer, Sanjeev Nautiyal, expressed confidence that the SBI Life will end the year on a strong note. Listen in.
For this year, we expect the ULIP to be around 70 to 73%. We expect the overall protection business to be somewhere around 13%, and the remaining would be the other parts of the business. We'll be very happy if we could reach somewhere around 25% in the next 2.5 years. Margin will continue to grow 20% or so. We expect good growth. We think we could grow by 1 to 1.5% every year quite easily.
Japan's SoftBank Group has proposed to offer free electricity after 25 years to International Solar Alliance member countries, including India, that signed power purchase agreements. Speaking at the second Reinvest conference in Greater Noida, SoftBank CEO Masayoshi Son said that the new investment is mostly happening in renewable energy, which has already become cheaper than thermal power.
Free power, free electricity after 25 years. What does it mean? I want to offer this to India but not only India, but any ISA countries, any ISA members, I'd like to offer free electricity after 25 years.
In fact, we also spoke to the CEO of Hero Future Energy, Sunil Jain, on this very development. He says that with advent of virtual power stations, power may become free, but people will have to pay for data. Listen in.
I believe 25 years is a long time. My view is that power may become free in next 15 to 20 years itself, and that is nothing to do with the life of the plant. As virtual power plants come in, you will stop paying for power and you may be paying only for the data. Well, Masayoshi-san is in both telecom and in power, so we need to understand, will data be also free? But I strongly believe that technology will be disruptive. Power may become free in next 20 years while you pay only for the data.
Welcome back. Now, world's biggest motor brands have assembled in Paris to unveil their latest models at the Mega Paris Motor Show 2018. The 10-day event will kickstart tomorrow. CNBC TV18's Arif Sherwani is joining in with all the latest from inside the exhibition. Arif, show us around.
That's right. So you're joining us from the 2018 Paris Motor Show. So while more than a dozen manufacturers haven't shown up this year, and it was considered to be a dud. So for example, Volvo wasn't here, Volkswagen wasn't here, Ford, Rolls-Royce, Bentley, a bunch of them didn't show up. But despite that, there are lots of highlights from the show, especially ones that are India specific. So BMW has launched the brand new 3 Series, so that will be important now. It's on a bigger platform called the CART platform. So it's almost 70 mm bigger. That will be a car making its way to India very soon. Other than that, Mercedes-Benz have showcased their new MPV, the B-Class. So that is also an important India-specific launch. They've also shown their new GLE here, which will go against the likes of the BMW X3 as well as the Audi Q5. So that's an important launch that has happened. Now, in the electric space, we have seen Renault has showcased its KZ concept on electric mobility, which is based on the Quid. So that is an interesting proposition. So it's not yet clear whether that is going to make it to India. Right now, it's a China-specific model that they've showcased. They have cited lack of infrastructure as far as bringing it to India is concerned. But it's interesting still to see a Quid-based electric car. Other than that, Skoda is the big one, which has an India focus. So they have shown their Kodiaq VRS, which is the performance variant of their mid-size SUV. So that is going to be important to watch out for. Also importantly, moving away from cars that do not especially have an India-specific angle, but are yet interesting. So Peugeot showed its E-Legend electric concept, so that's a really good looking car. It's been hailed as the showstopper for the 2018 Paris Motor Show. Other than that, Ferrari have shown their FP1 and 2 variants, which are a single-seater and a twin-seater sports car. It's yet to be seen if they'll come into production, but those essentially are pretty much the highlights here. So now today is the last day of the press day. Tomorrow onwards it opens to the public and it will go on till the 14th of October. And that, on that note, it's back to you.
Okay, Ari, we'll keep getting you back to give us snippets from that very interesting auto show. But with that, we have to wrap up this edition of India Business Hour Plus. Thank you for watching. Good night.